After the bell, are you ready for Apple and Yahoo to report earnings? Hello everyone, Adam Hewison here, co-founder of MarketClub with your midday market update for Tuesday, the 24th of January. We're going to do things a little bit differently today. We're going to start off with 3 stocks that are on the move that we want to share with you very quickly because the trading day is still pretty young. And they are Waters Corp, that's symbol WAT, that's the chart we have on the screen right now, Waters Corp. The next one is going to be Coach Inc., COH is the symbol there, and Quest Diagnostics, symbol DGX. First one we're looking at is the symbol for Waters, WAT. And you can see we had a very large move on the upside today. This is live. And we're going to put our trade triangles in here and just shows you how easy these things are to put in. Boom, and there it is. It came in right today at 83.68. The market's currently at 85.51. It's pulled back a little bit from the highs that we saw, but it's nonetheless, it is still a very positive sign for this market. The highs was 86.99 today. So currently trading itself about a buck and a half from the highs, but it's had a huge move up, and of course we captured that move from the trade triangles. Now the other thing that's very exciting to me about this particular stock that I want to share with you is it has coming from what we consider to be a very large, if you watched the show before you'll know what we're talking about right now, it's coming from a very large what we call energy field. There's lots of energy in this market. It's gone sideways since August, mid-August, around August 10th. It's just sort of just like this, boom, 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 boom. Really no decision. And suddenly, boom, on the upside, and you've taken out all of this area. So any pullback to the 84, 83 level is going to be met with good support. And I think this market has the potential of going to $99. Just change that a little smoother, $99 to $100 a share. Now here's the reason why. If we clear the screen off, go back to the longer term charts, let's say 2 or 3 years, you can see we've traded as high as this. I'll take the triangles off, make it simple. But you've traded as high as $99 and change, so I think we could very, very easily see it back up to those levels, particularly coming from this area, and particularly when you think of this market, how it's pulled back. So let's just take it out just a little bit more. So I would say if you measure from this point here, the last big low, to the highs, and I'll put our Fibonacci trading tool here. Just click here, very simple, click, drag it down to the lows, and you can see we got right back into that 61.8% pullback support area that Fibonacci is so famous for. The move from here is indicating that the trend continues up, and if we go even further out, you'll see that this market has been on a pretty good trade on the upside really since April of last year when we made the lows in the stock market, April, March of last year. So we've been a pretty good stare. We've had the first pullback. We're going back up. Are we going to take out the highs? It's still too early to tell, but right now to be in the stock, you should be long. So let's go to our next market. And the next market we're looking at is Coach, C-O-H. That's the symbol. And again, we'll get in a closer look, and we'll put our trade triangles in. And it's so easy to do. Boom. You can see a trade triangle came in right today, and that was from 66.54. Market's currently trading at 68.57. That's a $2 profit you already have there. And you can see the other points we've got in the weeklies and the monthly all seem to hit at the same time. Again, this is a very strong energy field. Not so strong as the one we just looked at, Waters, but it's still nonetheless very strong. And I think what we're looking at there is this sort of energy field from these levels here. So let's see how that plays out. And it looks to me that we could see this market go quite a bit higher. And if we go out from these levels, and the Coach obviously makes very high-end products, but if we scope it out from these levels, and I just want to take this off the screen because it's going to get confusing otherwise. So clear the screen, and we go out, let's say, 5 years. You can see we're actually making new highs here, which is very exciting, which means 52-week highs. Definitely want to be bullish and long this market. 67 looks like 67 and change, 67. 84 is a high. We're obviously higher than that, so we're on our way. Looks like it wants to go higher, and this is going to be a big, big move to the upside. Certainly, we're looking at $100, well, possibly $100 on this market. So, but I think conservatively, you could look, say, from let's say the 50 area up to 65. So I say $70 to $80, maybe another $12 in the stock on the upside. Still looks very good to us. That's Coach. So that's a signal just came in today. You can see the date, January 24th, 68 66.54, currently trading at 68.57, $2 profit already. So let's go to our next market. Now these symbols, these signals come in dynamically with our company. We're using our trade triangle technology, of course, and it's very easy to use, and it's one that you should be looking at. Now this next stock is DGX. Now this, again, we'll put our trade triangles, and you can see the trade triangles were long before this at 58.75. The market's currently trading at 59, and that's the key thing. The trend was already in place, but we just made new highs today out of this movement. This looks positive, so in order of appearance, I'd have to say I'm longer term more bullish on Waters Corp, and then Coach, and then Quest Diagnostics. That'll be the three, but the three both in strong upward trends, plus hundreds, which means you've got a strong trend. Let's go to our normal markets now, and that's going to be the S&P 500. And this is the S&P 500 cash we track. As you can see, the market has been going sideways for the last 3 or 4 days. We do have a positive mode from 1292 on the monthly triangle. You can see that happened on the 10th of January, and it's been confirmed, obviously going higher. Can this market go high? Yes, we're looking for this market to go up to the 1370 to 1400 levels. So our target zone for this market, and again, this gets back to this, this potential formation you have here. You broke it up to the upside, and so we're looking at 1370 to 1400 on the upside on the S&P 500. It should find good support right around the 13 level and 1300 level. So let's see how that plays out. Obviously, as we get into Wednesday tomorrow and then Thursday, Friday, we'll see how this market shapes up. But it's had a good performance last week. It's basically digesting what it's done in the last couple of weeks here. So let's see how it plays out, and we'll go from there. Let's clear the screen again, go to our next market. Next market we're going to be looking at is going to be silver. And silver is interesting place, and I'll tell you about what we're looking at in silver. Cyclically, we can see this market possibly making a high period, much like it made here and here and here. As you see, we're not quite, this high was not quite as high as this high, and conversely, this is not quite as high as this high. Now, I think you've gone probably a little bit beyond the Fibonacci retracement level. However, we think this is a cyclic period. The one thing that confirms this, or would confirm this, is if we get our weekly trade triangle red and pointing down. Right now, it's mixed. We have a plus 60, and if you've seen this report before, you'll see a plus 60 is a trading range, and that's used. You want to use the tools you want to use for that. The Williams percent R, which is overbought, and also possibly not so much the MACD, that's a trending tool, but the Williams percent R and the Donchian trade channels. That's a good thing to look at. But I think this falling three candles, I want to give this some more time to develop. We need to see a definite turn, like a pull boom down like this, or like boom like this, something to get this market momentum moving. I don't think it's going to happen anytime in the next 24 hours. So let's go to our next market. That's gold. Now, gold, like silver, we still think this is a market that's in a state of turmoil, not turmoil, but let's say rotation. We're at the high end of the Donchian trade channel. We have a plus 70, which is an emerging trend, but a long-term monthly trade triangle, which has been so successful in gold, is negative, indicating it has more work to do. So possibly, if we draw a trend line, we can do that very easily with MarketClub. Just click on the highs, drag this down, and you can see we're sort of right there at that spot. I think the chances are we're going to see this market pull back, and I say that because of this reason, and we'll see if it works out. But generally speaking, the market has found these are, just to tick this off, these are cyclic highs right here and here, and if you measure this out, the same distance, it brings you right here. So this to here and to here, it's the same time window, and look at what happened. You sort of came up, down, I think up, I think we'll go down again. I'd like to see it test the area 1550 again. Whether that happens or not, we have to rely on our trade triangles, which are mixed right now. Weekly up, monthly down, mixed signals. It's a plus 70, which is an emerging trend, but let's see how that develops later on. So let's go to clear the screen, and we'll go to our next market. The next market we're looking at is going to be the copper market. Copper, we've been bullish on this. It's a plus 85. It's a strong upward trend. See the green monthly and the green weekly arrows, triangles are pointing higher. You've cleared this area here, and it looks to us we can see this market go back up to possibly 4, maybe even higher. But generally speaking, this is a nice energy field we've got right here, and I think that's one of the things to look at. Nice energy field right here. We've broken over this highs right here, and it looks to me if we get a little more pep there, and that could be the equity markets pushing it, because it really is going to be derived from economic expansion, which doesn't seem to be on the horizon, doesn't look to be on the horizon, but sometimes markets anticipate things 6 months in advance, and that's what you have to remember in the stock and some of the commodity markets. So let's clear the screen again, go to our next market, and the next market we're going to be looking at is, of course, going to be crude oil, which is a very interesting market right now in my book. We have a weekly that just turned down. I can put that in for you. Boom, right there. You see there, it turned down on the 22nd at 87.93, and market's about $1 higher. But the monthly is positive. So the pattern we were looking for in this market was actually a pretty classic pattern, and we thought we were seeing this happen. We've illustrated this before, but I'll show it. We thought this is going to be the way it was shaping up to do, and maybe it still will be that way. The key level here is going to be the 104 level. Anything less than that is going to be just like choppy, choppy, choppy. And certainly on the downside, you've got to be looking at somewhere around the 92 level. So I think the key thing is going to be, where do we go from here? I think the longer-term monthly trade triangle is going to be the key. If we go over 104, I'd like to get very, very bullish on that, the crude oil market, thinking it's going to go to 120. And if it breaks below 92, then I think we're probably going to just be in a bigger trading range and possibly looking for it to go down to maybe 82, which is right here. So I think that's kind of like the scenario we see right now. But generally speaking, for some reason, I'm more bullish on this market based on our monthly trade triangles. And that's the key that I'm hanging my hat on right now. So let's see how that plays out. Let's clear the screen again, go to our next market. Next market is going to be the Eurodollar. We talked about the Eurodollar going up to the 130 level. We're certainly there now. We're getting close to the top of the Donchian trade channel. You can see the 1, 2, 3, 4, 5, 6, 7. Out of 8 days, you had 7 of them up in the euro. And that's another whole can of worms over there in Europe, which could go either way. We're showing a 55 trading range, monthly and weekly down. If someone put a gun to my head, would I buy or sell it here? I'd sell it, absolutely. It seems like almost like a no-brainer. You've got a overbought condition, possible bearish divergence, and you're still, MACD is showing like it wants to go higher, but our trade triangles are negative, and that's what I'm going to hang my hat on today on that. So getting to our next market, the dollar index, much the same pattern there. We're towards the bottom end of the range, and this is a basket of currencies, about 16 currencies we're measuring the dollar against. So you've had a nice move up in the dollar. We're back down to an area that we should find support. We're probably oversold. Yes, we're oversold, and I think that's the key thing to look at. The trend, monthly and the weekly, positive, just like the euro. I would say probably not a big risk here. You may want to give it a couple more days just to base out. If it's going to base out around here, once you see that momentum turning up, get long. I think that's the way to do it. So let's go to our next market. This is the CRB Reuters Index, the commodity index. Again, this market is kind of stifled. The pattern we were looking for here on monthly is negative, but we were looking for a pattern of this market going higher, showing inflation is once again alive. You've got the two things. You've got one, the double bottom right here. So that's a double bottom right here. And then you have the potential of another base building head and shoulders bottom, which means you have to go over the 316 level. And that's the key there. We think right now it's sort of in a broad trading range, bounded by about the 307 level and the 316 level. Over the 316, then we can go significantly higher. And over this level here, this is the big one. This is the 325 level. We can go probably, I would say, from there we can go to about the 350, 360 area as a target zone. So that's how we see it. And but also we'd love to see you this coming. Whoops, let's clear the screen. That doesn't look good. Let's clear the screen, and we'd love to see you at either our summit that we have coming up in Salt Lake City, or if you'd like to have one-on-one personal Market Club coaching, this is the number to call. Give us a call, 877-219-1482. It will make a difference to your trading, and this is the year you should do it for yourself. Make it for you, and make a free consultation, a free phone call to us, and we'll talk about one-on-one Market Club coaching. Hey, this is Adam Hewison. I'll be back tomorrow, same time, same place. Have a great day trading. Thank you.